Okay, hi everyone. In this video, right, we're going to do a comprehensive guide to setting up a Singapore company. So if you're a local living in Singapore or you're a foreigner outside of Singapore that wants to set up a Singapore company, then this video would be useful for you, and it would cover all the various topics that you need to know about setting up a company in Singapore. Okay, so the topics to be covered, right? I broke it down into 4 different topics. The first one is starting a Singapore company, and this is when the company hasn't even been started. So the things that you need to take note of when you start a Singapore company. Then secondly, right, we will move on to compliance, and compliance in a sense, once the Singapore company is incorporated, then the company owners, the company directors, they will have to take note of these items. These are compliance matters which you cannot fall foul of. Then next, right, we move on to day-to-day matters. So things like running the company or setting up a bank account for the company. Then finally, this is actually quite important. We move on to taxes. So how taxes are treated, how corporate taxes are paid, what are the tax rates. Okay, so let's move on. So the first topic to be covered today, right, we will be touching on starting a Singapore company. And like I mentioned earlier, this is regarding, this pertains to individuals who want to start a Singapore company. They don't have a Singapore company yet. What do you need to know and what do you need to start a Singapore company? Okay, so there are various types of entities for you to consider. Imagine if, let's say, you want to start a business, then these are the type of entities which you can set up in Singapore. So most common, right, would be company, and the company would be divided into a private or public company, and this company is limited by shares, which means that they have shareholders. Then there would be the non-profit organizations. The non-profit organizations are also companies, but they don't have shareholders, they have members. And this would usually be something like if you want to set up a charity, yeah, basically non-profit organizations. Then sole proprietorships, these are business owners which do not want to set up a company, and then they just want to do this sort of like I mean, maybe they're just like a tuition teacher then that wants to operate in his or her own capacity. Then he or she would have to register a sole proprietorship if they are operating with another name other than their own individual personal name on their identification documents. Then partnership would be essentially two sole proprietors coming together, or two or more sole proprietors coming together and forming a partnership. Then this would be deemed a partnership. Then limited liability partnership is a form of a partnership that has separate legal personality. So essentially it's like a company, but it has various partners. The difference, I think, which is significant, is that there are no shareholders. Then finally, right, there's this latest form of company, which is the variable capital company, and this usually is for family offices or individuals who are maybe running a fund, and then they want to seek investments into their fund. Then this would be variable capital company. But in most cases, in fact in 99% of the cases, it would be a private company limited by shares, and this is the type of entity which we are going to deal with today. So like I mentioned, right, the private company limited by shares is the most common type of entity. The advantage, right, is that it can issue shares and it has a separate legal entity. And when I mention it can issue shares, this is very important because the private company limited by shares is a structure whereby it allows people to invest in the company. Essentially, the company is issuing shares to shareholders in exchange for cash. So if you can see those startups, maybe tech startups, whereby they have maybe Series A, Series B, Series C funding, seed funding. All these fundings, what are they doing, right? The company is actually creating new shares out of essentially nothing and issuing these shares to shareholders in exchange for cash. So I give you an example. During the height of the pandemic, when Singapore Airlines was in trouble, what it did was that it created new shares and it sold these shares in exchange for cash. So what it did was that it created new shares so that it can sell these shares for money that it needed to run the company. The advantage is that the company can very easily raise cash, but at the same time it is disadvantageous for the existing shareholders because they might get diluted. Okay, so the typical way that I would advise my clients if they want to run a business whereby they want to get other people involved in future would be to set up a private company limited by shares. And then as you go along, if you increase in size whereby the number of shareholders reaches a certain number, then you would lose your private company status and you would have to become a public company, and then there are different audit requirements which we won't be talking so much about today because in essence now currently what we are talking about is somebody who is thinking of what entity to set up, and we're talking about a private company limited by shares, which is the most basic and most common company structure. And a company is a separate legal entity. What this means is that if let's say you set up a company to run a restaurant and maybe somebody comes into the restaurant and falls down, then that customer, right, wants to sue. The customer can only sue the company. The customer cannot sue its directors or its shareholders, which means that if you are a director or a shareholder, your assets, your personal assets are insulated from any legal suit. And this is very important because it allows you to go about doing your business, but at the same time protecting your personal assets from any legal suit that your company might incur. So if it wants to sue, right, it would sue the company for its assets. So the company's assets are separate and distinct, which means that if the company purchases the property is in the company's name. So if you look at the title of the property reflects the company's name, not its shareholders, not its directors. So like I mentioned in the previous slide, the company is a separate legal entity. You just imagine it like another person. So if let's say you and your friend goes out and then he gets into trouble, then that trouble would sue your friend. He won't sue you. But at the same time, right, the same thing when you go out with your friend and then let's say your friend says, oh, I have bills to pay, I have utilities to pay, I have a study loan to pay, I have to pay for my car installment. You don't pay for your friend. It's just like if the company needs to pay rental for the office, then you don't pay for the company. Even though you're the director, even though you're the shareholder, you don't pay for the company. Imagine it as another person. But because it's another person, right, and the directors give the company life, so the directors are the ones who are operating the company. The shareholders are the owners of the company. So like for example, if you go to the stock exchange and then you purchase shares of Apple, Apple Incorporated is not going to ask you as a shareholder to go down to Cupertino to is it at Cupertino? Yeah, I believe so. To do work. That's because shareholders are just investors. They put money into the company, and every year they will have this annual general meeting whereby the directors will have to show the shareholders what profit or loss that the company has incurred for that financial period. So the directors are the ones who are operating the company. And because it's a separate legal entity, there is always a chance that the directors or the shareholders might be errant directors and errant shareholders, which means that they set up the company not for the purpose of doing business, doing bona fide business, but what they set up the company for is to perpetuate a fraud, which means that they set up a company so that they can maybe cheat people of money, and then if ever money was cheated, then those people who were cheated would sue the company rather than the directors. So there are two issues. One is accountability and the possible use of company to perpetuate fraud. Okay, and this is the reason why you need to account as the directors to the shareholders of what you're doing, and then you need to submit this accountability so-called report, which is your essentially your annual general meeting, the registrar is trying to say, okay, have you done all your accountability to all your shareholders? And then you as the directors need to inform the registrar of companies, which is ACRA, that this has been cleared already. Okay, and just a side note, right? If a company is used to perpetuate fraud, then the corporate veil or the insulation that a company provides to its directors or shareholders, right? That insulation or this corporate veil will be lifted, which means that then the person who has been cheated, right, can actually sue the directors or the shareholders because they use the company to perpetuate fraud. But fraud is actually quite a high bar to be proven in court. Okay, so two issues, right? Accountability and possible use of company to perpetuate fraud. And that is the reason why you have annual general meeting, and that is what I'm going to touch on in the compliance section of this presentation. So now that you decided to start a company or incorporate a company, which is essentially giving birth to a new company, there are a few things that you need to take note of. Number one, you need to choose a company name. So if you're engaging us to do your incorporation for you, you need to choose three options for us. And essentially the suffix at the back of the company would be private limited, which is PTE Ltd. I would recommend that clients just go with PTE Ltd as a suffix at the back of the company name, because that is the most common suffix that is out here in Singapore. So if somebody writes a check and he spells out private limited in full, there is a very high possibility that if you go to the bank, this check cannot be encashed. Okay, because the name is not exactly the same as what the company is, what the company's name is on its business profile. Okay, then you need a business activity, which means that what is the company doing? You can have up to two business activities. There can be a primary business activity and a secondary business activity. Then next, right, you need to decide on the paid up capital, which means that the company is going to sell you shares. You are going to be the shareholder. How much of maybe the company sells you 1,000 shares. How much are you going to pay the company for this 1,000 shares? This is the paid up capital, the initial investment that the shareholders make to the company. And next, we need at least one director, must have at least one local resident director. A resident director is somebody who is residing in Singapore. He or she doesn't need to be a Singapore citizen or a Singapore permanent resident, but he or she needs to be residing in Singapore, which means that if you're a foreigner and you want to be the local resident director, you need to have a valid work pass. You have to apply for an employment pass, and on your employment pass, your employer would be this new company. And then you need at least one shareholder, so that person should be you. So in most cases, when people start a new company, the director is the same person as the shareholder, and you need a company secretary. That's what entities like us, we are corporate service providers. Usually we will provide at least one named company secretary. In some cases, most cases, we will put two of us as your company secretary, just in case one of us not around, you need something urgent to be done, then there are at least two of us. Next, you need a registered address. It cannot be a PO box. This registered address has to be operational during office hours, and there is a possibility that you can use your home address as the registered address, but please note that there are limitations, which means that there are only certain trades that are allowed to operate under the home office scheme. And in most cases, like for example, if your business is a food and beverage business, then that is not a form of business that you can use your home as your home office. In most of the cases, right, it would be consulting work or administrative services, whereby there are not many people who need to visit the office, and then that would be those are one of the few instances whereby your home can be used as your office. Okay, and then an agreed constitution. You can use the model constitution. Constitution is basically the rules and regulations of how the company does its business. So if let's say you might be familiar with memorandum of articles and associations, and this essentially is the same as the constitution. So the constitution, if let's say the company wants to issue new shares, then it would have to follow the company constitution to issue these new shares. That is the way that the company does its business, and this constitution needs to be handed over to, let's say, the bank when you're opening a company bank account, because the bank needs to know how the company would decide on maybe its board of directors, how it conducts itself when dealing with outsiders or new shareholders. So this constitution, in most cases, right, you can use the model constitution. You can just go online and you can search model constitution. There's a model constitution that you most probably can find on the Singapore statutes online. So you can go to Singapore statutes online, and then if you can't search it on Google, you can go Singapore statutes online and search for model constitution. Okay, so that's all for topic 1. So we'll be moving on to topic 2, which is compliance, and this is once the Singapore company is incorporated. Okay, now we move on to the second topic that we are going to cover in this YouTube presentation, and that is compliance. And this only happens once the Singapore company is incorporated. So these are the things that the company needs to take note so that it doesn't fall foul of the law. Essentially, it is what the law is requiring the company to do, and then the company is actually adhering to the law. Okay, so let's move on. Okay, so there are at least 2 documents which you will need to be familiar with. I think I've mentioned this earlier as well. The constitution of the company, and this is essentially the rule book of the company. So every company has a constitution, and the constitution spells out how it does certain businesses. Like, for example, when there's a transfer in shares, right, how does the transfer of share occur? How does a company appoint or remove its directors? These are all entrenched inside the constitution of the company, and every company has a constitution. So if you have a Singapore company and your Singapore company doesn't have a constitution, that is definitely not true. One was created when you incorporated the company. It's just that you did not keep a copy of it. And in some cases, right, the constitution of a company might be referred to as the Memorandum of Articles and Association, or MNAA. And this essentially is the same thing. So that means if, let's say, you have an MNAA and you flip your MNAA, it will actually spell out, right, how you're supposed to do your business for the company. Like I mentioned earlier, right, how are shares transferred, how are directors appointed or removed. Okay, and then next, right, there's the Companies Act, and this is the law of the land. If you refer to the Companies Act spells out the requirements that the company has to do, and this is basically what ACRA, or the Registrar of Companies, is trying to enforce. And I did up this diagram, right, to show. So the blue color portion is the law, and then the company is inside the blue color portion. So the company is run by its constitution, and then the Companies Act, right, oversees the whole company. And you can't insert things into the constitution that runs foul of the Companies Act, because the Companies Act is the umbrella over all companies in Singapore. So you cannot do something in the constitution that runs foul of the Companies Act. Okay, so there are at least 2 government agencies which you will need to answer to. So the first one being the Accounting and Corporate Regulatory Authority of Singapore. So the ACRA. So they administer the Companies Act, and to some degree, right, the constitution of the company. So ACRA is actually interested in the company adhering to all the rules and regulations that are spelled out in the Companies Act, whereas IRAS, right, it's essentially managing the Income Tax Act. So like all individuals, you will need to pay income tax, and companies are no different. So companies need to pay income tax as well. So IRAS, they actually administer the Income Tax Act. So if, let's say, you're a company, you will be paying corporate tax, and the corporate tax would be in adherence to the Income Tax Act. So if your company is doing certain businesses, like, for example, our company has an employment agency arm. So we have an employment agency license, and we are governed by the acts that govern employment agencies, and this is managed by the Ministry of Manpower. So not only are we accountable to ACRA and IRAS, we are also accountable to the Ministry of Manpower. And if let's say your company does things that require a Monetary Authority of Singapore license, like for example, maybe you are running an investment scheme whereby maybe it's collective investment whereby people invest in unit trusts, and then you are issued a Monetary Authority of Singapore license to run a unit trust investment, then your company needs to adhere to MAS regulations. So then that is another government agency which you will need to answer to. Okay, so on a base level, right, it's always at least these two government agencies, number 1 and 2, which is ACRA and IRAS. Then the relevant sections in the Companies Act, right, as a director is responsible for the day-to-day running of the company. And in section 157 of the Companies Act, it gives a very broad explanation of what the director's duties have to be. And the director must act honestly and use reasonable diligence in the discharge of the duties of his or her office, which is the duties of a director. So what it means is that, for example, if the director doesn't know how to keep proper accounts, then the reasonable and diligent thing for the director to do would be to engage an external accountant or engage an internal one that comes in and helps the company keep proper accounts. So as a director, you can't go and say, I don't know how to do accounts, so that's why I never keep accounts for the company. That's not reasonable. Okay, every company needs to keep a proper set of accounts, and the reasonable and diligent thing to do would be to hire an accountant if you can't do it yourself. And this is the portion whereby I mentioned earlier with regards to ACRA. So every company other than a company mentioned in subsection 1, which are some exemptions, every company must lodge a return with the registrar after its annual general meeting. And the annual general meeting, right, must be held within 6 months after the end of the financial year. If let's say the financial year is 31st December of a certain period, then by the end of June the following year, the company would have to hold its annual general meeting, and within 7 months after end of financial year, so in this case would be end of July, then the company will have to file its annual return. Essentially what it means is that this annual return is informing ACRA that all is okay with the company has held its annual general meeting, the shareholders have approved the financial statements, and we've already fulfilled all the requirements for that financial period, therefore we are reporting to you. And then ACRA will, once you report to ACRA, then you can go about ACRA will just wait for you for the following year. So every year there's this accountability thing whereby the directors have to account to the shareholders, and then ACRA would like to know whether the directors have really done this accounting to the shareholders. And like I mentioned earlier in the first portion of my presentation, every company needs to appoint at least one resident director. And this individual cannot be an undischarged bankrupt or disqualified from being a director of a Singapore company. And if the resident director is declared a bankrupt during his or her period of time while he or she was a local resident director, then the company will need to find a replacement. And this replacement, right, that person needs to make a declaration that he or she agrees to becoming a director of the company. Okay, and that declaration is done by completing this form 45. That one is not that important, but basically just need to know that there's a form to do this declaration. So the registered address, right, like I mentioned earlier, that every company needs to have a registered local address, and this address must be open and accessible to the public during normal office hours. It should be placed it should be the place where registers of the company are kept, and I'll touch on registers later. So like I mentioned, you can use a registered office service like the one that we are providing. So if let's say you don't have an office, which means that your company is not renting an office or doesn't have an office which you you own, then you can use a registered office service like ours. You can also use a home office scheme, but the home office scheme is actually limited to certain trades. So if your business nature is not one of those trades, then you cannot you cannot use your registered office as your home address as your registered office address. Okay, so next is the appointment of a company secretary, and the company will need to appoint a qualified company secretary within 6 months of incorporation. The post of company secretary cannot be left vacant for more than 6 months. So if let's say you change the company secretary, you don't have to replace the company secretary immediately, but that post cannot be left vacant for more than 6 months. And if you appoint a corporate service provider like us to do your incorporation and then to do all your annual return filings and whatnot, right, then definitely we will provide a named company secretary in as the company secretary of your company. So in most cases, right, we usually put more than one. So usually we'll put two of us in listed as the company secretary of the company. So just in case anything happens, right, then we still have the ability to appoint replacement. Not appoint us. We just let's say one individual goes on leave or is on medical leave, right? Then the other company secretary can respond if let's say the need for the company secretary to do something is rather urgent. Okay, and then next, right, is the appointment of a company auditor, and every company will need to appoint an auditor within 6 months from the date of incorporation, and all public companies need to hire an auditor. So like I mentioned earlier, right, there are public and private companies. If you see that your company, the type, right, is public, right, then you definitely need to hire an auditor. There's no qualms about it. But if you are private, right, if your company is private, you may qualify for an audit exemption if the company meets at least two of the following three conditions. And the three conditions are total annual revenue or total assets do not exceed 10 million, and the company does not have more than 50 employees. So you fulfill two out of three conditions, right, then you qualify. The private company qualifies for audit exemption. And this is only for private companies, okay? It's not for public companies. So all companies need to keep proper accounting records. This is for the purpose of reporting to both shareholders and the authorities. And like I mentioned earlier, right, keeping it in Excel, right, or on a jotter book, right, is not acceptable. Okay, and the main reason is you need proper financial reporting at the end of every financial year. So you can do it in-house, which means that you hire a permanent staff that is maybe the accountant of the company, and then he or she will have to come into office every day, right, to do your accounts. Or you can outsource it because you have not reached a certain volume where you require somebody to be in charge of the accounts. So you can outsource the work, right, to like corporate service providers like us, whereby we provide outsourced accounting support. Then what we'll do is that we will send a courier to pick up all your bills, invoices, receipts. Then we will key into a cloud accounting software, and then this cloud accounting software can be accessed by you from your end. In most cases, it's quite convenient because nowadays with technology, the cloud accounting software can actually pull in the bank statement, and then we can reconcile directly from there with whatever documents that we pick up. And so this actually helps a great deal, and it also helps to keep the whole accounting process very neat. Okay, and so there are some parties who may want to have access to a company's accounting records, and these may be banks. Let's say the company wants to take a loan, then the banks will require the financial statements. The registrar may require you to provide them with their accounting, with your accounts. Your shareholders, definitely, investors, government agencies, especially if the company is applying for a grant. So there are many rather generous grants which the Singapore government does provide for Singapore companies. And then if you want to take a grant, right, then you need to upload your financial statements into the business grant portal, and then because Enterprise Singapore assesses the financial health of the company using the financial statements. So accounting records is actually very important. Okay, and all company documents should have the company's name and registration number, which is the UEN number, unique entity number. Okay, you can print the documents on, you're going to print documents on company letterhead. And if the document does not bear the company letterhead, then you need to use company stamp to affix these details. And one of the examples which I can share with you is, like for example, if let's say the company signs an agreement with one of the telecommunication companies to provide internet services, and obviously since the contract comes from a telecommunication company, right, then it will not bear the name and UEN number of your company. So what you need to do when you sign this agreement, right, is that you need to take out the company stamp and stamp it there, while the director of course does the signature on behalf of the company, but the stamp needs to be affixed on that document as well. Okay, so then next we talk about the maintenance of register of controllers. So all companies are required to maintain a hard copy or digital register of controllers, and this register must be accessible during office hours. Essentially, it's a register of who has the voting rights of more than 25% of the company's shares. So if let's say that individual is a beneficial owner, that means he gets someone to hold the shares in trust, then that person might also qualify as a controller. So the same thing, you need to maintain the public register of members for foreign company. So all foreign companies, right, if they come to Singapore, then they are required to maintain the public register of members. No foreign companies are exempted. Don't say, oh, I don't know and I no need to do. No, that's not true. Okay, so if you're a foreign company, you are not exempted. So these are the other registers. Basically, a register is a logbook. It just records the in and outs of the personnel in the company. So like register of shareholders, which when did the shareholder enter the company as a shareholder, and then when did that individual maybe increase his or her holdings, or maybe sold off the shares, so then that will fulfill the register of shareholders portion. And then if let's say you're a director, and then you should be listed in the register of directors, then when you left, right, it will also have this record of when you left. Okay, so next up, right, application for GST. So basically, if let's say your company's projected annual revenue exceeds 1 million, then the company will need to register for GST with IRAS, which is the tax authority. Okay, so there are two types. One is voluntary, another is compulsory. And within compulsory, there are also two views. So one is a respective view, which means that if the turnover is more than 1 million at the end of the calendar year, then the whole year, right, all the transactions will be levied GST. Prospective is if you expect it to be more than 1 million in the next 12 months, then you can, I mean, in that sense, you would voluntarily register for GST already. Okay, so if you make any changes to the company particulars, right, you need to file with ACRA within the allotted time frame. In most cases, it's 14 days. So there are penalties for non-compliance. For example, if let's say you do a share transfer, right, you need to lodge this with ACRA. So if you lodge this with ACRA, right, then within the time frame, then you're fine. But if you cross the threshold time frame, right, then there might be penalties for non-compliance. So the penalties will be when you do the filing, right, then the composition amount will be there when you click file. In most cases, it most probably will be us, the corporate service provider, who's filing. Then we will just inform the client that there's a fine because this business was not filed within the given time frame. Okay, and sometimes, a lot of times, clients actually inform us very, very late. So like they might ask us to do some filing which is now end April, and then they say, oh, this one is for a change which we agreed upon on 1st of April. So then that becomes a huge issue because there's a composition fine there. So then, like I mentioned earlier, right, there are reporting requirements for both ACRA and IRAS. There are also more reporting requirements if you hold certain licenses, and I gave you an example of an employment agency registered with Ministry of Manpower. That is like our company, whereby we also provide manpower, employment agency related services, and then we have reporting requirements with the Ministry of Manpower to maintain our license. Okay, and all companies are required to file the annual returns with ACRA, and the time frame to do this is 1 month after the AGM, or 7 months from date of end of the financial period. Okay, so ECI, all companies are required to file their ECI within 3 months after the end of its financial year. Okay, so this is actually estimated chargeable income. So if you have chargeable income, the company has chargeable income, which eventually they will have to file with IRAS. You need to do this estimated chargeable income. It doesn't have to be final, but it should be a more or less rather accurate depiction of the profits of the company. Okay, so this corporate tax filing, right, deadline to file, right, is sorry, there's a typo here, this 30th of November of every year. Okay, so the preparation of IRA-A and IRA-E, right? IRA-A is the form that the employer, the company needs to submit to IRAS every year. So it informs IRAS of the employee's earnings, and then the IRA-E, right, is the document that the employer gives to the employees. Okay, so the IRA-E, right, the employee will take a look, and then they will know what to file in their annual return, in the annual declaration of their income tax. So basically it just contains the return of the employee's remuneration. So it includes the information that the employee has to complete when it files its income taxes. So basically just telling them how much you earn from a company during that 1 year. But in most cases right nowadays, with this thing called the auto inclusion scheme, right, because we make CPF payments on a monthly basis, and then this auto inclusion scheme actually helps to update the salary portion, right, into the employee's IRAS portal, IRAS tax portal. So when the employee logs in and then wants to declare his or her income tax, the figures are already there already. Okay, and then all companies are required to appoint a data protection officer. This officer needs to be registered with ACRA or the PDPC. Okay, this data protection officer is the individual who's in charge of how the company handles data. Okay, so the contact details of the data protection officer needs to be available to the public. Okay, so there needs to be a data protection policy, and the financial penalties can range right up to 1 million Singapore dollars. Okay, so that's all for topic 2, which is compliance. The next topic we'll be covering is with regards to the day-to-day matters of running a Singapore company. Okay, so now we'll deal with the day-to-day matters. This means that your company has already been incorporated, so you have a valid Singapore company that has already been incorporated, and then these are the things that you need to deal with on a day-to-day time frame. Okay, so bank account, every company should have its own bank account. Okay, so payment to and from this account, right, should be in the company's name. And I cannot stress this strong enough, because there are many times, right, whereby clients, they conflate their own personal bank account with the company's bank account, which means that they treat the company's bank account as an extension of their own personal bank account, and vice versa. So if let's say the invoice goes to the company, then the company should use its own personal bank account to make payment on this invoice. Okay, so like I mentioned, payment to and from this account, right, should be in the company's name, which means that if let's say the company provides services, or let's say the company sells something to a client, then the client needs to make payment into the company's bank account and not into the director or shareholders bank account. And if let's say the company needs to buy, let's say, a printer, right, the company should be paying for the printer using its own money. Okay, so there are some minor workarounds on this strict rule, right? But if let's say like in the case of like my company, right, let's say we need to buy a printer, and then let's say it's really really very urgent. What I'll do is that I will pay for it first, then the printer, I can bring back the printer to the office, and then at a later date, right, I can make a claim back from the company to reimburse me for this printer. Okay, so that in that case, right, the company is still bearing the cost of the printer. Okay, so the company, right, may have more than one bank account, so you may decide to go with maybe OCBC, and then you might have maybe DBS for some other reasons. Maybe you want to keep the client deposits, maybe you collect deposits for certain reasons, or maybe you collect certain subscriptions for different services, then you want to segregate the bank account, then that might be a valid reason. So your company might have more than one bank account. You might bank with more than one banks. So almost all major banks in Singapore have corporate account packages for Singapore companies, and in many cases, right, the opening of the bank account can be done remotely, which means that the applicant, right, doesn't actually have to go down to the branch to open the bank account. In fact, for banks like, let's say, OCBC, the corporate banking team is not located at any of the branches. If you go to the branch to open a corporate bank account, what they will do is that they will just take down your details, and then they will send you home or send you back to your office, and then the corporate banking team will contact you. So in many cases, right, corporate banking is not opening a corporate bank account is not done at the branch, but once your corporate bank has been opened, then you can actually go to the branches to do your banking transactions, as well as just doing it over the internet. Okay, and then there are proliferation of digital banks. So digital banks provide an alternate way of banking for clients, and this is actually especially popular with clients who are not located within Singapore. So that means like maybe they operate maybe in another country, and then but they run the Singapore company from outside of Singapore. Then digital banks are a huge plus for them. Okay, so accounting records, right, day-to-day running, you need to keep proper accounts. Using an Excel sheet to record money in and money out is not ideal. Okay, so we actually have clients that they just use two tables, right, on Excel, then you put this is money in and this is money out. Okay, it makes sense to them, but when you do proper accounts, right, proper accounts is not that simplistic. Okay, and there are many cloud accounting solutions which companies can subscribe to, and the benefits of these, right, are that some of these they are actually linked to the company's bank account. So the company's bank will actually send the bank feed, right, to these cloud accounting solutions, and then when you log in, right, you can see your bank balance and any transactions all within this cloud accounting software. So it's very well integrated already, and this is a huge plus. So you should seriously consider cloud accounting solutions. If you require any cloud accounting solutions, of course you can look for us. Our details are in the description of this video, and then we can recommend you some user-friendly cloud accounting solutions which your company can subscribe to. Okay, so please note that there's a requirement to keep proper records and accounts for 5 years, which means that you have to keep all your invoices, receipts. It doesn't have to be hard copy, it can be soft copy, so you can scan them all, but you have to keep this for at least 5 years. Okay, so then next we talk about CorpPass. This is a platform for all entities. So if you have a company, right, it's for the company to make business to government transactions. But the CorpPass is way more than that already. Is now encompassing things like you can use the CorpPass to link between like banks. So banks are not obviously not government agencies, but part of government agencies. But yeah, so the Singapore ecosystem, right, is such whereby everything is actually going to be linked all together, and there's this digital identity thing, and CorpPass is the platform that companies will use to link all services. So every company has a corporate digital identity, and you will need to set up this CorpPass for your company. So employment, if the company is hiring locals, it will need to register a CPF account. This is Singapore's retirement savings scheme. It's like a pension scheme whereby every month Singaporeans and the employers, right, will need to contribute to. and then they earn a return or an interest on it on a monthly basis, and then it at the end of the day it's supposed to provide for the employees' retirement. It's a retirement savings scheme to provide for a retirement fund when the employee retires. So if the company is hiring foreigners, right, you will need to apply for a valid work pass for the foreigner before the foreigner can commence work. In most cases, it will be the employment pass. There are other passes related to it as well. If you require any assistance, of course, you can contact us again, because we have the expertise to advise on employment related matters, as we have a employment agency license. So the company will be subject to prevailing employment laws. So like there are certain limits which you can and cannot cross, right? Then the laws are all in the Employment Act. Okay, so your company will be subject to prevailing employment laws once you hire locals or foreigners. Okay, the operational office, this will be undertaken by the company. The tenant will be the company, not the director or the shareholder. This is very important because, like I mentioned, the separate legal entity thing, right? The company is actually it's like another human being. Okay, so the registered office can be different from the operational office of the company, which means that you can have the registered office. Like some of our clients, they put the registered office as our office so that we receive all the official correspondences from maybe government agencies, whatnot. But then their operational office, right, is a different location, because they don't want the letters all that to go to the operational office, so they rather leave it with the corporate secretary. So certain trades require certain licenses, and that's what we're going to talk about. So you can only apply for these licenses after the company has been incorporated. I cannot stress how often I have received inquiries about, oh, can my company apply for a license? Then I ask them, okay, what is your company? Then name or details about your company. Say, oh, I've not started a company yet. Then you shouldn't be thinking about licenses. Okay, so licenses are only after the company has been incorporated. There's a centralized portal for almost all licenses, and this is license 1. So all the licenses, right, from all I think Singapore government agencies, they are all consolidated into license 1. So it's a portal, right, whereby you go in under your entity, then all your licenses will show under the license 1 portal. Okay, and then like what I mentioned about Corp Pass, you have to use your Corp Pass to register your license under license 1. Okay, so that's all for day to day, and the last topic that we'll cover is taxes. Okay, so now we'll move on to the fourth topic, and this is the last topic for this YouTube video. We're going to talk about taxes. Okay, so specifically what type of taxes the company will have to pay. And I will also touch on personal income taxes when the company pays its directors or its employees. And you will understand why I need to touch on this, because a lot of people are quite confused when tax season is here. During corporate tax season, they will ask us whether they have to pay personal income taxes, or report personal income taxes. And during personal income tax filing season, clients typically will ask us whether they need to file their corporate taxes. So these two taxes are distinct, which means that corporate tax filing season is actually different from personal tax filing season. Okay, so like I mentioned, right, they are not the same. Okay, so corporate taxes and personal income taxes. Corporate taxes are taxes on the company's profits, and personal income taxes are taxes on a person's income. Okay, so the corporate tax deadline is 30th of November, and usually the final 3 months of the year, we typically call that tax filing season. A season is 3 months, so usually I deem the last 3 months before the deadline as tax filing season. So essentially that should be around September, October, November. This is tax filing season, and personal income tax filing deadline is on the 18th of April. This is for e-filing, which means that there's no paper filing. That means you do e-filing, you do it online. Your personal income tax filing deadline is on the 18th of April. So tax filing season for personal income tax, right, is somewhere in January, February, March. You can start filing your personal income tax. So that is the personal income tax filing season. For corporate taxes, right, Singapore corporate taxes, companies are face a flat tax rate of 17%, but this 17% is before tax incentives and reliefs. And you would also have to watch out for budget announcements. So every year in the beginning of the year, the Singapore government, right, will make announcements in the budget. Usually the finance minister will announce the tax incentives or tax reliefs during the budget for that financial year. So for example, right, for financial year, for the following year 2024, right, you would, if you're a company, you would have a 50% corporate tax rebate, subject to a cap. So you can see, later I can show you guys, right, that corporate taxes, even though it's a flat tax rate of 17%, but if you incorporate the tax incentives and reliefs into the tax rate of 17%, the effective tax rate is actually a lot lower than 17%. And later I'll show you guys that corporate taxes are actually lower than personal income taxes. Okay, so this is an example, corporate taxes, tax reliefs for new startup companies. So what is a startup company? A startup company is one that is within the first 3 years of incorporation. So if you're a company that has just been incorporated, if you're within the first 3 years of your company's incorporation, then that company would be deemed a new startup company. And this definition is in line with the IRAS definition. So IRAS will deem you as a new startup company. And as a new startup company, the new startup company can enjoy these exemptions. So 75% exemption on the first 100,000 of normal chargeable income, and a further 50% exemption on next 200,000 of normal chargeable income. So what this means is that if a company makes a profit of 100,000, this is tax payable before other rebates. So essentially 75% exemption, which means that IRAS will only deem that they'll only tax you based on 25% of that first 100,000. So the calculation for the tax payable before other rebates, right, is 25% of 100,000 multiplied by 17%, and this gives you a tax payable before other rebates of $4,250. But for year of assessment 2024, which is all corporate taxes that are filed this year, the corporate income tax rebate of 50% is given, and this was actually announced during the budget, and there's a cap of 40,000. So if you can, as you can see, right, the final tax payable, right, if you take 50% of $4,250, the effective tax rate is 2.125%, because your final tax payable is $2,125, which means that if a new startup company makes a profit of 100,000, the corporate tax that the new startup company will pay, right, is $2,125, which is 2.125%. Okay, so in comparison, right, personal income taxes, it's a little bit different. It's on a progressive scale, which means that the more income taxes that you earn as an individual, then you would have to pay more income taxes. So for personal income taxes, if we, like just now the first example, right, the company made 100,000 profit. So now let's assume an individual who has 100,000 personal income last year. Okay, so how much personal income tax would he have to pay? So you just look at the table, right, then you see the first 80,000 is $3,350. Then the next 40,000, so we have another next 20,000 is 11.5% of 20,000 is 2,300. So you add 3,350 and 2,300, right, you get $5,650. So as you can see the previous page, right, a company makes a profit of 100,000, the final tax payable is 2,125. But for personal income taxes, right, if the person earns 100,000, his tax payable is $5,650. So like I mentioned earlier, right, don't confuse personal income tax with corporate taxes. Corporate taxes are paid by companies, and personal income taxes are taxes paid by an individual. And a lot of times things are conflated because the director or the shareholder of the company is it's also the one that declares the corporate taxes. But you must always remember, what are you declaring? If you're declaring the corporate taxes, then you're declaring the profit that the company makes, not you. Okay, so don't confuse company profits with your income. Even though later on, right, you may issue dividends back to yourself, okay, as the shareholder. Okay, but a salary is an expense. So as an expense, right, it lowers the profit of the company. Therefore, if you are the director and shareholder of the company, you can decide whether to pay more or less salary, as this will affect the company's profit. So you look at the very simple equation that I put there. So profit equals to revenue minus expenses. Since salary is an expense, right, what the company collects as revenue, if you issue more salary to the employees of the company, and director fees are employee salary as well, is salary as well. Okay, so if as you can see, if you pay more director salary, then you actually have more expenses. So if you take revenue minus a larger number, that profit is lesser. What happens is that the company will pay less corporate taxes, but the individual who collects that salary will have to pay higher personal income tax. So as I showed you guys in the first few slides of this particular topic, corporate taxes are typically lower than personal income taxes. Another thing to take note of is that dividends are after tax. Okay, which means that if the company has already paid taxes on that profit and it pays the shareholder dividends, because after you finish paying the tax as a company, then you have some more profits left. Let's say like your company has profits of maybe $500,000. After you pay taxes on that profit of $500,000, the company will still have money left from that $500,000 minus away the taxes that it has paid. And that amount of money, right, can be issued back as dividend to the shareholders. Because it's retained earnings, you can of course release these earnings back to the shareholders. And when the shareholder collects these earnings, these are called dividends, the shareholder does not have to pay personal income taxes on those dividends. So as a shareholder, if I collect dividends from my company, right, I don't have to declare personal income taxes on those dividends which I've collected. So what is the prudent thing to do? If let's say you are both the shareholder and the director, and you are thinking of whether to pay yourself salary, then you might consider leaving more profit in the company itself and paying yourself as the director less salary, because that will reduce the expenses and obviously correspondingly your profit will increase. And then let the company pay out the corporate taxes back to IRA. So the company, because it earns higher profit, it has to pay more taxes to IRAs. But after it has cleared these corporate taxes, right, it can then issue back dividends to the shareholders, of which you are also the shareholder. So generally end up it's still money back in your pocket, but the tax burden is actually lower. Okay, so that's the main reason why in most cases clients tend to want to declare more corporate profits rather than to issue salary back to the company, back to the directors or its employees, especially if the directors are the shareholders of the company. So rather than pay out as salary or director fees, they rather pay out as dividends to the shareholders, because dividends are after tax. Okay, so if you got any queries when it comes to setting up or running your Singapore company, you can always email us at hello@rafflescorporateservices.com. These are our websites. You can take a look at our websites for our services, our price list and services, and we have quite a fair number of articles where we share with clients and prospective clients about how to run your Singapore company. They also include manpower related articles, so what type of passes you need. And if you have any queries, right, feel free to email us. Usually my office and we are all quite responsive. And that's all from me. Thank you for tuning in, and I'll see you at the next video.